hear me? Can you hear me? Hello, can you hear me? Hello, can you hear me? Can you hear me? Can you hear me? I want if you can hear me. I would like to see your if you can hear me. I want to believe you all can hear me. I'm really sorry for the delay. So we'll just go straight to the chart. How has it been? How has been trading? Let me know in the comment section. Okay, so how has it been? Like I told you guys during the weekend session, it's the week of the election, and we should expect um, slow movements, slow erratic price action this week. But so far, looking at the USD pace, you would observe or notice that the dollar has been bearish since yesterday, and that's the reason. For example, GBP USD is bullish. You see, GBP USD is bullish. So my bias for GBP USD this week still remains bullish. So what am I looking at for tomorrow's market? I want to see price pull back to the fair value gap that was created today. So you can see on today's market, you can see a fair value gap was created here. We had a fair value gap here. This gap got filled before this bullish move, and it created a new fair value gap before breaking this resistance. So I want to see price pull back to this fair value gap before going bullish on Australian dollar USD. Okay, so that's my take on GBP USD. Sorry, my bias is still bullish. I want to see price pull back to this fair value gap or this fair value gap. So these are the areas I would consider going bullish on GU. Let's look at Euro Aussie. I made some pips on Euro Aussie. I took a trade on Euro yesterday, and I made close to 70 pips on Euro Aussie. I sold Euro Aussie. So go to the daily. So my bias on Euro Aussie is still bearish for the week. It's still bearish for the week. So what is my expectation for GU for Euro Aussie tomorrow? What's okay? So as you can see, today's candle is bearish. It is bearish. So after the close of today's candle, what do we have on 4-hour time frame? So on 4-hour, a fair value gap was created on 4-hour. This is the fair value gap that was created on 4-hour. I want to see price fill this fair value gap before going bearish on Euro Australian dollar. My bias is still very bearish. Okay, it's still very bearish. So I want to see price pull back to this fair value gap before going bearish on Euro Aussie. So my bias for Euro Aussie is bearish. I hope that is clear. My bias is bearish for Euro Aussie. And for Australian dollar USD, my bias still remains bullish on Australian dollar USD. But I wouldn't be buying Australian dollar USD from the current market price. I want to see the price pull back to this fair value gap that was created after the breakout from resistance. Okay, so I want to see price pull back to this fair value gap before going bullish. So that's my take on Australian dollar. Wait back before you buy Australian dollar USD. I hope for a pullback to this fair value gap. The fair value gap that was created here has been filled. You can see that the pattern we have here is similar to what to tell you that both respectively correlated. I hope that is clear. Let's move to the next pair, USD card. USD card is negatively correlated with GBP. USD is bullish. You can see that USD card has been bearish. You can see it's been bearish. Now USD card is created a fair value gap here. So I would expect that this gap gets filled before it continues with its bearish move. Selling the USD, like I told you, we open the chart. The first thing you want to identify is where price started moving. That's the first thing you want to identify on the chart. Now, USD card is bearish. Where did the bearish move start from? It started from this point. After the formation of this candle, after the close of this candle, the bearish moves from this point. So if you are not sold from this point, why would you want to sell from the current market price? Let's calculate the difference. From this point, you can see the market already moved in your direction 72 pips. And if you had executed the trade from this point, your stop loss would have been 54 pips. Okay, 52 pips, and now you would have made you would be in profit, and now you should have close to partial profit. But if you decide to sell from this point, you would set your stop loss at this level. And the risk has increased. If you had missed this opportunity, there was a pullback. You can see you would have entered sell after the formation of this spinning top. After this pullback, we had a spinning top. You would have sold. If you had missed this opportunity, you had the opportunity after this pullback. You can see we had a doji candlestick formation here after this pullback, which was another opportunity to sell. So you have missed one, two, three opportunities. So it wouldn't make sense to sell from the current market price. I hope you're getting me. So patiently wait for price to pull back to fill this fair value gap before you go bearish on USD card. That's my take on USD card. I'm still very bearish on USD card. Then on gold is still bullish. Buyers on gold is still bullish. Let's start with the weekly time frame. So as you can see, last week candle closed as a doji, and after the close of the doji candle, a lot of retail traders would have executed sell. And where would they have their stop loss? Their stop loss is residing at this previous high, and there is a high probability they will clear the stop losses residing at this high before going bearish. That is what I think is going to play out on gold. A lot of people have been waiting for gold to sell. So immediately this candlestick form, this doji candle form, many retail traders would have jumped in. If you go to daily, so you can see what we had on daily. This is an engulfing pattern indicating change in trend from bullish to bearish. So a lot of retail traders would have executed sell, and where would they have their stop losses? This equal high. So there's a high probability they would clear the stop losses residing at this high before going bearish. So gold is still bullish technically, Fundamentally, also, gold is still bullish. Fundamentally, it is still bullish because of the ongoing US election. Most investors would go for gold, would invest in gold instead of the US dollar because at the moment a lot of investors are skeptical about the outcome of the elections. They are scared, so they wouldn't invest in the US economy. They would rather invest in gold, which is a safe haven. So it is after the election we can predict the so we can tell if gold will be bearish. But at the moment, gold is bullish. I hope you can hear me. So fundamentally, gold is bullish. Technically, gold is bullish. And if we look at how, okay, this is today's candle. If you look at previous day candle, this was Monday candle. This is Tuesday candle. So on Monday, you can see how the candle closed. This looks like an inverted hammer, right? This is an inverted hammer, which indicates change in trend from bearish to bullish. So what happened after the formation of this inverted hammer? A lot of retail traders would have executed buy, and where would they have their stop losses? Stop losses will be residing at this previous low. So what they did today was to clear the liquidity residing at this previous low. So what we have here is a buy setup on gold. But let's go down to 4 hour and see the pattern on 4 hour time frame. So this is what we had on 4 hour time for the day. This 6 candles here makes up the daily candle, right? So after the formation of this pattern here, I'm sure a fair value gap was created. After the formation of this pattern, a fair value gap was created, and we want to be sure, we want to ensure that that fair value gap has been filled. Let's go to 1 hour. Was there a fair value gap here? No. Let's go to 15 minutes. So you can see on 15 minutes, a fair value gap was created at this point. Has that gap been filled? It has not been filled entirely. The price has tested that zone 2 times. You can see first time and second time, but it was not filled entirely. You can see that. So just wait for price to pull back to this area before going bullish on gold. If you buy gold, wait for price, patiently wait for price to pull back before going bullish on gold. This would have been so let me go back to the chart. I want to believe you guys can hear me. So this have been the best entry for Mr. Ellis. Are you in this class? If you're in this class, please respond.
Mr. Elvis, can you hear me? Mr. Elvis,
Mr.
Mr.
Elvis,
Elvis,
can
can you
you?
hear me? Sorry guys for that echo. Okay, I believe you all can hear me. If you can hear me, just drop the comments. You can hear me, right? You can hear me, right? So this would have been the best entry for buy for gold buy. Okay, this would have been the best entry, and the market is currently trading above this level. How many pips above this level? This is 163 pips above this level. This is where you ought to have entered the trade, and the market is trading far above that level. It will not be wise to buy from the current market price, right? It won't be wise to buy. So I would advise you wait for price to pull back to this area. If you had entered buy when price tested this favorable gap, that would have been great. Okay, maybe at this point, after the formation of this candle or this candle, that would have still be okay. But buying at this price is at a very high risk. It's at a very high risk. When you open your chart, the first thing you want to identify is the trend of the market. You want to know where price is coming from, where it is at the moment, and where it's likely going to go to. Those are the three things you must know before you execute a trade. And that is why you have the MT4 to know where price is coming from, where it is right now, and where it is likely going to head to, where it's heading to. Are you getting me? So since you open the chart and you know this is where price started going bullish, and the market is currently trading at this point, why would you want to buy? If you are buying your stop loss, if you had bought from this point, your stop loss would have been maybe 50 below this level. Probably you would have risked maybe 50 pips on this trade. That's the risk you would have taken if you had executed the trade from this point. But if you now decide to buy from this point, your stop loss will be at this level. You can see the risk, 196 pips. So if the risk on a trade is 196 pips, what will be the reward on that trade? That's about 300 and something pips, right? If you're trading with, let's say, one ratio 1.5 risk reward, that would be close to 70 pips. The question is, do you have the patience to wait for price or for the market to give you 270 pips before you close that trade? But if you had risk if you had risk 50 pips here, definitely you would have made profits. You should be out of the trade now, right? You would have exited the trade. You had made profits because you would have made good profits on this trade. So entering the trade from the current market price is at a very high risk. I hope that is clear. So my bias on gold is still bearish, but I can't buy gold from the current market price. And once the price pull back to this area, then I'll consider going bullish on gold. If you want us to look at together, please let me know. Drop it in the comment section. If there's any pair you want us to look at together, drop it in the comment section. Okay, drop it in the comment section. If there's any pair you want us to look at together, drop it in the comment section. Okay, so let's move to the next pair. Let's look at GBP GBP direction is not clear. Let's see what we have on GBP Let's see if there's any opportunity on GBP Let's see. All right, so GBP let's start with the weekly. Let's see. Last weekend was bearish. It was bearish. Okay, this is an angry man. an angry man. During the weekend session, we identified this fair value gap that was created. And 2 weeks ago, I told you guys there's a high probability why I would want to fill this gap before going bearish. So what happened last week? They tested this gap. Okay, they actually did not fill the gap entirely before the strong rejection, this pullback. So I'm thinking GK would still want to fill this gap before going bearish. That's my position on GK because one, a lot of retail traders would have executed sell after the formation of this time demand, and most will have their stop losses residing at this the high of this candle. So there is a high probability they would want to come and clear the stop losses residing at this high before going bearish. That's my position on GJ. GJ could also go bullish if this fair value gap, if the candle closes above this fair value gap, then we should expect more bullish move on GJ. If it closes above this fair value gap, then we should expect more bullish move on GJ. But would it be reasonable to buy? Let's assume a candle closes at this point. Do you think it would be reasonable to buy GJ from above this level? No, it will not make sense to buy, right? Because if you look at the chart, this is where price started going up on GJ. This is where price started going up on GJ. So if one had not bought from this point, let's go down to daily to identify where price has started going up. You can see this is where GJ price. You need to know where price is coming from. You can see this is where GJ price started going up. So this is where this would have been the best time and price to execute a buy on GJ. If you miss this move here, probably you would have turned from this point. So if you had bought from this point, let's say you took it from that point, the risk is very high. This is about 355 pips, and you are patient. You hold this trade for at least this is over many weeks now, close to 3 4 weeks. You would have made 1,234 pips, 1,234 pips. So if a pair has done over 1,000 plus pips, why would you want to buy? And at the time the market will even get to this point, it will have done over, let's say from this point, over close to 1,600 pips. So why would you want to buy from? It doesn't make sense to buy from this point. So you should wait for a strong pullback on GT, at least price to pull back before you consider going bullish. I'd rather look for a sell opportunity than to buy at the current market price or above this fair value gap. It will not make sense to buy. Are you getting me? Because if you apply your Fibonacci also from this swing high, if you apply your Fibonacci from this swing high to this swing low, you can see this? If you apply the Fibonacci from this swing high to this swing low, you can see that price is already approaching a premium area, right? You can see that price is already approaching premium area. So why would you want to buy at a premium area? So it's best to wait for price to pull back, right? Wait for price to pull back to a discount area before you buy. So that's my take on on GT. I'm looking for a sell opportunity. The sell could be a pullback to a discount. It could be a short-term trade. Okay, it could be a short-term trade, but long-term GJ might still be bullish. But I want to see a pullback. Are you getting me? I want to see a pullback before going bullish on GJ. I hope that is clear. Any pair you want us to look at, please drop it in the comment section. Let's look at UJ. UJ, I think is positively correlated with GJ also. Same pattern. I can see a bullish setup on 4 hour time frame. Let's go to the daily. Okay, so yesterday or today's candle hasn't closed. It's still 60 feet. It has not closed. So it's bearish. So if we go down to 4 hour after the close of today's candle, let's assume today's candle has closed. If we go down to 4 hour, so you can see this is the current 4 hour candle on UJ. You can see the current 4 hour candle on UJ. So this is likely going to close as an armor, right? A bullish armor. So after the formation of no, this is a bearish armor. A bearish armor. If the body closes bearish, then we'd have to wait for the next 4-hour candle to close bullish. If the next 4-hour candle closes bullish, then one can risk buying USD JPY. Are you with me? Because here on the 4-hour time frame, you can see liquidity that was residing at this previous low has been cleared. You can see also the liquidity that was residing at this previous low has been cleared. You can see that. So if this 4-hour candle closes as an hammer, the next candle closes bullish will be a confirmation that there are traders who are willing to go bullish on UJ. Then one can risk buying UJ. Let's go down to 1 hour. So this is what we have on 1 hour time frame. So that will be my take on UJ. If you look for short-term buy on UJ, short-term buy, okay, short-term buy, there will be a pullback. You can see UJ might just fill this value gap and go bearish from that point. This value gap that was created on 1 hour. It could just fill this value gap and go bearish. Okay, so if that price fill this value gap, consider selling from this value gap or wait for a breakout from this support. Are you getting me? Wait for a breakout from this support. If the 4-hour candle closes below this support, you could go bearish or wait for price to fill this value gap before going bearish on USD JPY. I hope that is clear. I hope that is clear. If you are getting value from this stream, please give the stream a thumbs up. And if this is your first time joining the live stream, please subscribe to the channel so that anytime I come on live or drop any video, you get notified by YouTube. It's very important that you subscribe. Please do subscribe and do give the video a thumbs up. I believe you're getting value from this live stream. Let's build the community together. Okay? So that's my take on YouTube. Which other pair do you want us to look at? Can you all hear me? Mr. Emmanuel, are you still here? Mr. Okoro, are you still here? Are you still here? I believe you can hear me. I want to see your comments if you guys can still hear me. Can you hear me? Can you hear me? Can you hear me? I want to believe you can hear me. I want to believe you can hear me. Okay, which other pair? Okay, let's look at Euro USD. Let's look at Euro USD. Okay, so Euro USD, let's start with the daily time frame. Can you all hear me? I want to see your comments. I've not been talking to myself. I hope I've not been talking to myself. So Euro USD is still bullish at the moment. It's still bullish. Euro USD is still bullish. But should we buy Euro USD from the current market price? No. I personally wouldn't buy Euro USD from the current market price. Price should pull back. Okay, this would have been good entry for Euro USD. This would have been a good entry for Euro USD. And it has done over 115 pips. You can see Euro USD has done over 115 pips. So I don't think it's the right time to buy Euro USD. Let's see. Okay, so on Euro USD, 50 market structure has occurred on Euro USD. It was forming, you can see clearly that the trend was bearish. It was forming series of lower high and lower low. You can see it's obvious that it was bearish, and at this point there was a shift in market structure. Yeah, the shift in market structure. Okay, this cleared this low. There was a new high here. So there was a shift in market structure. This is a shift in market structure called. Okay, yeah. So shift in market structure occurred here, and there was a pullback. Price came back. You can see we had this resistance on support. Resistance on support. So price came back, tested this support area, and there was a rejection from that area. So personally, if I want to trade the EU, I want to see price pull back to fill this fair value gap. This is where I will consider going bullish on Euro USD. Price should pull back and fill this fair value gap, which is about how many pips from the current market price? About 70 pips. It's 70 pips from the current market price. So that's my expectation on the price should come and fill this gap. This is where I will consider going bullish. If price will not pull back here, then I wouldn't take a buy on Euro USD. So my bias on Euro USD is still bullish. I'm still very bullish on Euro USD. Please ensure that your volume is at its peak. Ensure that your volume is at its peak. Mr. Emmanuel, please ensure that your volume is at its peak. Thank you. Thank you. Any other thing? Any other thing? So I think that will be all for tonight's session. I think we'll be having this live stream every day, maybe by 10 p.m. We'll be having review, trade review, and outlook. Hopefully on a daily basis. Hopefully on a daily basis. We'll come on live here by 10 p.m. We'll have just maybe 30 minute session or 45 minute session. And during that session, I'll be taking your questions. If you have any questions, just note it down before. Probably you traded for that day and you have some challenges. You have questions that you want to ask, just note them down. It's during the live session I would attend to all your questions. You don't have to be coming to my DM to ask questions. Just you're coming for the live session, just note down your questions and I will attend to them because I like to use the chat to explain some things. There are some things I can't explain using text. That's why I always encourage you or implore you guys to show up for the live stream so that I can attend to your question using the chat to illustrate or to explain some concepts. Okay, any question, any question, any question? I'll watch the replay and know if the sound wasn't okay, then I'll need to fix the sound. So I'll know if it's from my end. After this live stream, I'm gonna watch the replay and know where the problem was. Is that from my end or from your end? If it's from my end, we'll definitely fix it next time. Any question? Any question? Any question, Mr. Anaya, Mr. Emmanuel? Any question? Any question? Any question? Any question? Any question? Any question? All right. Since there are no questions, I would have to end this live stream. I really want to appreciate you for your participation. Thank you very much. And I wish you a wonderful night. I might come on live tomorrow if I see another good opportunity, good setup on the chat. Maybe during the New York session. So just stay tuned. Just stay tuned on the WhatsApp or drop the link. I'll inform you guys before I come on live. Thank you very much. Do have a wonderful night. Please remember to be conservative. Please. This is not the time to go aggressive. Okay? Because of the ongoing election, be very conservative. This is not the time to go aggressive. This is not the time to over leverage. Trade less volume this period. Trade less volume this period. I think the result will be uh, the result will be out by Thursday. The result of the elections will be released on Thursday. On Thursday. So at the moment, please don't over leverage. Don't over leverage. Trade less this period. That's my advice. Okay. Good night.